Hello everybody, welcome to this week's live stream. I'm David Jones. If you haven't attended one of these before, I usually run them every Friday at 2:30 UK time, just as the US markets are opening. And what we do, we have a look at the major news announcements for next week, what to keep an eye on in the week ahead. Then we look at markets, look at a whole mix of different markets, stock market indices, FX, commodities, Bitcoin, all the usual. And then if there's any stuff you want looking at, we'll take a look at that as well. What a week it's been. How exciting. So started off, of course, pow, that was the beginning of the week. So the NASDAQ closed at about 21,770 last Friday. Opened Sunday night in the out of hours session, about 200 points lower, and then by about 11 o'clock on Monday morning, out of hours again, UK time, the market was 1,100 points lower, like a 6% drop before even the market had officially opened. So that was exciting. And it was all down to this China artificial intelligence company, DeepSeek, apparently been able to do AI much, much cheaper than it was being done so far. So suddenly I was coming back from London on Tuesday and I was reading Twitter on the train. Suddenly every person is an expert on Chinese AI and how it's going to be the end of markets. And lo and behold, look where we are. Pow even, all the way back up. So the NASDAQ is not quite back up to last Friday's close, but it's only about 70 points away. So it's been an interesting week this week. It's been an okay week for me trading. I bought gold earlier this week at 27.42, so in there, that's done okay. Missed the DAX trade, still beating myself up about that, and a buy signal just there, but I was faffing around doing other things. So it has been a really interesting week, but here we are again. Stock markets have bounced back. We had earnings from Tesla, Microsoft and Meta on, when was that? Was it Wednesday night? I think it was. And there wasn't really that much drastic out of those. Meta was at all-time highs before the earnings, spiked higher yesterday, so all-time highs again yesterday. I think Microsoft took a bit of a hit. Let's have a look at those, Microsoft. Yeah, but they've been a bit sideways overall since last summer. So an interesting week, but nothing's really changed. The trends are up, blah, blah, blah. The FTSE's at all-time highs. The Aussie index is at all-time highs as well. The Germans, the DAX is at all-time highs. The Italians are at all-time highs, just about. So business as usual for stock market so far. So as usual, what we'll do, we'll take a look at all of this stuff in a bit more detail in a second. Before we do that, let's just get some of the housekeeping out of the way. Just do a risk warning for the sake of good order. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay, that's that done. So next week, the big one probably is this time next week, and that is US non-farm payrolls. So the US unemployment numbers, which get released every month, typically on the first Friday of the month, but not always. But they are next week. So it's the first Friday in February, next Friday. So the payrolls will come out. They could be interesting. But we also have, earlier in the week, we've got EU inflation on Monday. So inflation, still very much a big topic, obviously for markets, all tied into interest rates and all of that. And on the subject of interest rates, on Thursday, we have the latest UK rate decision. Because the Europeans, the ECB, cut interest rates this week. I don't think the Bank of England is expected to cut, is it? No, remain at current levels So yeah. So I don't think we're expecting a cut from the Bank of England, but let's see what next week brings. But I think Friday non-farm payrolls is the big one. Okay, let's take a look at markets before we get into some of this other stuff. Let's start with the US. It's been an exciting week, but once again the trend has prevailed. The sell-off that we saw in markets on Monday. And if we have a look at something like the daily, if we strip out the 24 hours, this is the S&P. That was the move on. So Friday, hit an all-time high on Friday a week ago, closed at 6,100, then opened at 59.70 or thereabouts on Monday this week. And you can see the bounce back. Yeah, so, exciting, lots of words written about it, but ultimately, if you look at it now in a daily chart, it doesn't actually mean that much, doesn't it? It was a pretty dramatic candle, bang bang. But here we are. We are. Where are we now? 6,082. The all-time high was 61.18. So what's that? Less than 40 points away from where the market is now. 0.6% away from where the market is now. So is it 0.6%? That sounds about right. Yeah. So yeah, a volatile week, but hasn't really changed the direction of travel as far as I'm concerned. So I would absolutely be expecting fresh all-time highs for US indices in next month, February. So that's that. That's the S&P. Same old for me. I'd be a buyer of the dip, all the usual. We did see this dip on Monday. Go back to, it only got knocked back to mid-Jan lows. Again, if you read some of the commentary, I do think most financial commentary is absolute waste of time. Don't even bother reading it. Yeah, because it's just blur. It got knocked back to like a 2-week low, and then it bounced. Not even a 2-week low. Then the market bounced. Media and all of that love volatile markets, and it makes for a great story. But in the great scheme of things, even though it was a big one-day move, it definitely was a one-day wonder. I think this sell-off. So for me, let's see what today brings. From a short-term point of view, I'd be looking at perhaps the lows from yesterday. What were the lows from yesterday in session lows? Down around 6,020. So if we did see a bigger sell-off today, that's what I've been watching. You can see there's the Monday low, and we've had the market trending higher all week. So to me, that looks like a fairly solid recovery from an initial knee-jerk panic. That's the S&P. The Nasdaq, doesn't look massively dissimilar. There's our sell-off on Monday. Holds above, again, what was it? A 2-week low. These big lows from middle of January, 20,500. It got close to those, but we saw it bounce back. It's still, the Nasdaq is still, pretty sideways in the great scheme of things for the last 6 weeks or so, but nothing to get too excited about a market crashing just yet. And if you take a look at the Dow, what's the Dow doing? Did that sneak to all-time highs, or is it sneaking to all-time highs even as we speak? I think it is, isn't it? There we go. The Dow is not quite today, but within a smidge of fresh all-time highs on the Dow. That was the great hindsight trade on the Dow, mid-Jan. Moves back to the trend line, holds above the November lows, and bang, here we are, 3,500 points higher. So yeah, all positive, I think, for US stock markets. Exciting week, blah, blah, blah. But that's it. FTSE, look at that. FTSE, I often refer to it as the most boring stock index in the world because it seems to spend an awful lot of time going sideways. But this week we've had fresh all-time highs on the FTSE. A big move yesterday, a big breakout again yesterday. So I'd have to buy the dip on the FTSE. It'd be interesting to see, does this year end up different for the FTSE compared to other years? Do we see perhaps some real momentum for the FTSE? If you look at, when was that? 2023, sideways for a lot of it. 2024 makes a new high in May and then goes sideways until this January. Maybe this year we'll see the FTSE, all the FTSE blue chips will come back into favour and people will be flocking to these rather than the the so-called Magnificent Seven stocks or the tech stocks. Let's see what happens. But yeah, positive move for the FTSE, obviously. The Aussie, I thought I'd mention that. I traded the Aussie last year. I was in the Australian index. This is the Australian 200. So I was in that from May last year, and I actually came out of it in December. So, I mean, it did all right in the end. It got a bit choppy, quite choppy indeed, in August. And here we are again, just today for the Australians. All-time highs in that market. So that's bullish. The DAX, I mean, that's been phenomenal in January. The DAX, broke out through the December highs, 20,530. And here we are 1,200 points higher. What's that? 1,200 points on the DAX is about 6%, isn't it? So that's risen 6% in 2 and a bit weeks, the DAX. So that's pretty impressive. So I'd absolutely be buy the dip on that one. Japanese market, not as exciting, the old Japanese market. A little bit sideways, a little bit boring. But there's that. So stock markets, broadly positive, I think, and have shrugged off so far the threat of cheaper AI. Let's see what next week brings. But I'll be going into next week looking to buy the dip. Let's look at the dollar. I was waiting to be a buyer of the dollar index this week, and on Monday it was still heading lower. It gapped up a bit on Wednesday, Thursday. It's actually found a bit of momentum today. So let's see. There's absolutely an argument to be a seller up here, though, because the trend has been down since middle of January. This level, 108.50 on my chart, has been a problem. Let's see where it ends the day. But that's maybe... Let's see what happens next week. I think it's an interesting market. It's all been a bit too sideways for me this week, the dollar index. But the bigger trend, for me anyway, is absolutely up on the dollar since September. Let's see what happens next week. So that could be one to watch next week to see what happens there. In other sort of currencies, pound against the dollar, that was recovering and has stalled a little since Monday of this week. You could make the argument, absolutely, the trend is still down on the pound against the dollar. So, let's see. A bit of a mixed week, I thought, for currency markets, and nothing really jumping out of me for that one. Let's take a look at gold. Like I say, I bought gold earlier this week, 27.42, 2,742, still in the trade. It's on a trailing stop. All looks good. And here we are, sneaked out to new all-time highs yesterday and has carried it on today. So that's interesting. I think, the big trend for gold, the latest leg of the trend for gold, we could say started in November 22. So we're 2 years and a bit into that. I mean, that's been a big old move again, isn't it? From $1,600 to $1,200. Where we are now. What's that? Probably a 70% move in gold in 2 and a bit years. Breaking out today. That's positive, I think. What's the next target? 3,000 for gold. So I think that's an interesting one next week. I'm in the trade, like I say, but I'd absolutely buy a dip on gold. Here's the hourlies since the beginning of the month, and the trend has been pretty much up for all of January so far. So I think that's an interesting market again next week because it is hitting these all-time highs. Silver, what's silver doing? Always a bit of an odd one, silver. I mean, it's sort of trying, isn't it? It's I don't know. I'd rather, you could make the argument to be a seller of silver or a buyer. It's all, the trend is up since Feb last year. So I'd buy a dip. I don't know if I'd buy it here. So yeah, I think gold is more interesting than silver to me at the moment anyway, as a trend follower. Bitcoin, let's take a look at that. I wonder, I'm almost tempted to call a top on Bitcoin for now. But, I have a problem doing that because the trend is still up. But, we've had, absolutely the trend is still up on Bitcoin. Obviously, it's got overextended from the trend. But we had that all-time high in mid-December at 108. We had a little nudge through all-time highs in Jan. And it's been volatile, but it's been a bit flat since then. So I wonder, is the old crypto mania, has it all calmed down a bit? Because let's not forget, this market was at 68,000 just before the election. So it's done 50% since the election. It's a big old move. Let's see what happens. I just wonder, are we going to have a bit of a sideways doodah for Bitcoin from here? So interesting. If it breaks 110,000, if it starts setting fresh all-time highs, I'll change my mind. But I wonder if it's perhaps a little bit tired up here after the size of some of the moves that we've seen recently. So that's that for Bitcoin. Not too exciting for me at the moment anyway. Other markets, oil. Oh, do you know, I've been sat here all this week. I've been so obsessed with trying to buy the dip in oil because I made money on the way up. I'm trying to buy the dip on the way down. I didn't actually buy. I've missed what has been an absolute textbook downtrend in the price of oil. It hit a new low yesterday, it rallied, and bang, here we are again, heading back to yesterday's low. I think that's an interesting market for next week, oil. This whole sort of 73-ish area where we are now. Let's see what happens. So I think from a short-term point of view, it's an interesting market. On the dailies, it's not interesting. It's all pretty sideways for the last... God, that's nearly 2 years now, isn't it? March 2023. So yeah, big range, but ultimately sideways. So I think that's an interesting one to watch next week. Do we see the bounce come in oil, or does it continue getting slammed like it is at the moment? So that's another market to watch next week. Nat gas, I was expecting the bounce in natural gas. But of course, natural gas does its own thing. It did hold the trend for a little bit. There we go. That was the trend from November. So it held it here into the third week of Jan, but it has really turned down since then. So I don't know. Natural gas is a strange old market. I would be expecting a bounce at some point, but it's still weak at the moment. So I'm not in too much of a hurry to do much on natural gas. Next week. What other markets do we normally look at? Other stuff that's interesting. There was a bit of chat in a WhatsApp group today about coffee. I mean, coffee's had a heck of a run. It's come off today, but I mean, the trend in coffee was up anyway, bang, 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 since October 23. So we are 15 months into that trend. It broke out again today. Not today. This week. Broke out to fresh all-time highs. Set fresh all-time highs again today, but it's reversed. I think that's an interesting market to watch next week. Some of these agricultural commodities I think are really interesting at the moment, but the trend on coffee absolutely up. You can see from the RSI it's pretty overextended, but then it did go quite overextended in November, and we did have a bit of sideways eventually after that. So I think that's an interesting market. Corn is interesting because the big trend on corn is down from May 22. So we're almost 3 years into that. But is it trying to break out? Corn's had a relatively chunky run since the summer when it was 364. It's 475 now. So it's moved, 30% and a bit more since the summer. Is this the start of a new trend in corn? Or actually, have we rallied back up to the downtrend line and bang, down we go again? So I think that would be interesting. And of course, cattle. I think, what's cattle done today? So cattle, live cattle, broke out end of December, had quite the run, given up a bit over the last few days, but that's a market, again, that was at all-time highs earlier this week. So lots going on in all sorts of different markets at the moment. But for me, a lot of focus for me, still on stock markets, US still strong. Will we get the breakout to fresh all-time highs in February? But these European markets, like the FTSE, like the DAX, like the Italian, and also the Aussies, the Aussie markets as well. Quite interesting to watch what happens next week with them. And this dollar, does the dollar start to turn around, and does oil rally, or is it going to carry on getting clobbered? So quite a bit to watch next week anyway, and gold, of course, at all-time highs. I'm not quite sure why gold is at all-time highs, but, you can't argue with the market. Perhaps there is still some uncertainty out there. Let's have a look. Let's see what does Google say. Why is gold at all-time highs? More buyers than sellers. Safe haven demand due to US tariff threats. There we go. Well, let's see. Let's see. But it's interesting though, I think, you know. And I think some of those tariffs come into effect this weekend, I think. I'm sure I saw that today somewhere. US tariffs, trade tariffs on Canada and Mexico on Saturday. So, but it's not as if that's a secret, obviously. So you'd guess the market is pricing that in. But let's see. Let's see what happens with that. So yeah, loads to watch. So that's that. It's been an interesting week. Lots of volatility, the start of the week. But as we have often seen, you know, US markets take a shock and they bounce back. So I'm still bullish on US stock markets. So now we'll take a look at anything you want looking at. But first of all, a quick commercial break from me. I run a WhatsApp group. I do webinars about once a month for the WhatsApp group. I did one on the 16th of Jan, so a couple of weeks ago now. The benefits of longer term position trading, what to look for, managing risk, riding the trend, adding to positions, because I think most people are too short term focused, you know, and should be more longer term focused. If you'd like access to that, you just need to join the WhatsApp group. And in the WhatsApp group, you get daily updates in the morning, markets I'm watching, trades I've got running, other stuff I think about, Q&A, people can ask questions throughout the day and I'll chuck my opinion in there. And then an update in the afternoon when US markets open. If you sign up for the WhatsApp group, the link is in the description. Use the code YouTube, you get 20% off. So basically the first month will cost you 40 quid. And you can stop after a month if you want to. That webinar is worth more than 40 quid. Okay, because it's me and I know what I'm talking about. And it's about an hour long. So if you want to try the WhatsApp group, most people who join the WhatsApp group stay in for quite a number of months, which is good for me, good for them. Everyone's happy. So clearly they see some value there. I enjoy doing it. So try it out. That's the WhatsApp group. If you want to find out who I trade with and try them out, I like them because it's tight spreads. You can trade small and you can link it all into TradingView. Go to bit.ly/David Trade. And anybody who joins via me will also get invited to monthly webinars. And of course, any questions, I'm more than happy to answer any questions. My email address is dj@davidjonestrading.co.uk. I don't have all the answers, but I've been doing this a long time, so I can always give you my opinion. Okay, that's it. Right, let's have a look at the stuff you want looking at. Let's see, what have we got? Nick, can we check LSE? LSE, is that the old London Stock Exchange, I'm guessing? Where is it? London Stock Exchange. You went long today with a stop at 115. So that's 12, is that, hang on, how much is that a share then? I'm confused. 120.105, is it 121 quid a share? It must be, mustn't it? LSE share price. It must be 121 quid a share. Yeah, oh, I'm really confused. Yeah. Was it? My brain has gone completely blank. It is 121 quid a share, isn't it? Anyway, whatever. So you've gone long with a stop at 115. So you're down here, yeah? That makes perfect sense to me, Nicholas, I think. So for me, let's have a look at the big trend. I mean, that's been a great trend, isn't it? Amazing. What's that done since 2 years ago? Or is that hourly? It doesn't have an hourly chart, it's a daily chart. So that's done, if we went back to 2023, so it was 71 quid. So it's made 50, so it's made 70% over the last couple of years. Breakout, classic breakout. Oh, look at that, lovely. Breaks out, retests, and off it goes again. So yeah, absolutely, the trend is up, isn't it? The trend is up on LSE. So yeah, bang. So really interesting on that. But yeah, I'd be a buyer. Breakout today. I mean, a more conservative stop could be, you know, the other side of that, 111 quid a share. But, you know, absolutely, I'd want to be a buyer. Shall I buy that? Hang on a second. Can I buy that? Let's see if I can Let's add it in to our little portfolio of trades. It might be a bit too big for my small YouTube account to trade on. Okay, thanks, whatever that is. What are we saying for stop? 11. Is that right? Yes, let's do that. Should we do that? Right, so I'm going to buy it as well. So I'm putting my stop down here. Run that as a longer term trade. Blah, blah, blah. Let's buy it. Pow! There we go. Right, we're in this together. But no, it's, I mean, you know, all-time highs today. All-time highs. FTSE's at all-time highs. European stock markets are doing well. Let's see how that works out. So my bet here is clearly this stock, the London Stock Exchange stock, is going to carry on going up and not take out my stop. If it falls back down to here, then something's changed. So I think that's an interesting longer-term trade to run with that mix of trades that we have in there. That Datadog from last week, that was doing well. It's doing all right. We did that trade last week. That's doing all right. So this is my YouTube account that's got £1,000 in. It's real money. It's not a demo account, it's real money. So there's the LSE trade. We did Datadog last week. They had a bit of a move this week. I was up £100 on that at one point this week. There we go. On Tuesday. It's come back a bit, but I'm quite happy to stick with it. What's that one? JD, we did that one a while ago. Anyway, blah. Cheaper AI should actually increase the value of tech stocks, in my opinion, because of broader market reach. Fair point there, I think. Fair point. And check Live Nation as well. Live Nation is the ticket. Is it the ticket company? Or something like that, isn't it? Wow, that's had a massive move, isn't it? I mean, I'd be tempted. I'd be a buyer. Big move since August, 88 to 144. So not quite doubled, but it's done $60. So again, about 70% move since August. So I'd be a buyer. Given the volatility, I would want a stop loss, probably the other side of the low for the year so far. If I was trading it off the dailies, a more aggressive stop loss, maybe you go in at 136, the other side of that gap. What was that gap on? Was that earnings or something? Whatever. So yeah, I'd be a buyer of that. But it's interesting that there are interesting stocks out there. I've done a few stock bits this week, as anybody in the WhatsApp group knows. I've been in that one, Visa. Oh, Visa's gone a bit nuts today. So I've been in that one since December. Visa, Costco, another one of the old favourites. Oh, that's doing all right, Costco. I've been in that one. And Aristanet got absolutely clobbered on the DeepSeek this week, but that's bouncing back. And Capital One Financial. So I've got a few US stock trades going. So there are some interesting ones out there. So yeah, what's your analysis of TT? I was in this one last year, I think. TTWO, Take Two, I think, isn't it? Take Two Interactive, isn't it, is the one. I was in those last year, which is why there are so many lines drawn on it. Let's just tidy things up a bit. I mean, I'd be a buyer, as usual. The question is, where does the stop loss go? I'd rather buy a dip. The risk is it doesn't dip. Yeah, but I'd be a buyer. What would you do? What would I do? I mean, I'd probably wait, because we had that breakout in November. It hit 192, 192, 192. It can't get through 192 at the moment. So I'd be quite tempted to wait and see if there was an opportunity to buy the dip or see if it breaks 192. So it's all a bit, for me, marking time at the moment. But yeah, I mean, it's positive, isn't it? I'd rather buy a dip than do anything. But yeah, soybean short. Can you look, please? Funny enough, we were talking about that as well in the WhatsApp group, and I would go short. Yes, I would go short. Because soybeans, big downtrend since July 23. So we're 18 months into that downtrend. We have had the rally since December, but for me, it hasn't taken out the late September high. So I would be short. If I had to do anything on soybeans, I'd be short soybeans. Oh, should we do that as well? Just go crazy. I think I'm going to end up using up all the margin in this account, actually, thinking about it. So maybe not. Yeah, so I'd go short soybeans with a stop at least above that September high. And I think it's interesting, because if that downtrend is going to continue, then the target from me for here would be for a run back to the 940 lows from December. It is overbought. It has gone overbought. Bearish divergence on the RSI. So that all adds into the argument that it's run out of steam. The bounce has run out of steam. So I think that's an interesting market to watch next week as well. But at the moment, I would be short soybeans. If it broke that September high, I would change my mind. But look at the price action of soybeans. Actually, going back to Feb 22, so going back 3 years, soybeans hasn't really had a meaningful rally, has it? I'm sure I traded it here, soybeans as well, on the way up, and I've not traded it much since then. But yeah, so my bet at the moment would be this is a bit of a dead cat bounce in the beans. So let's see what next week brings. How much do you risk on stocks, and do you keep a separate account? My risk is the same. My risk, I talk about it in the trading course I run. My risk is the same whatever I trade. So yeah, and do you keep a separate account? I have done in the past. At the moment, I'm trading stocks in a separate account to my other account. But as long as you keep good records, like an Excel spreadsheet, is what I do, very simple spreadsheet, nothing too complicated, I think you can trade all this stuff in one account. But for me, I do it in some different accounts. But yeah, there's no reason why. But for me, a trade is a trade. The reasons that I am in... So the reasons I'm in the Visa trades, yeah, are pretty much the same reasons I'm in the gold trade that I did earlier this week, just on a different time horizon, and my risk is, as a percentage of the account, is going to be the same. Risk management is so important. There's a video going out this weekend. It's all queued up on YouTube, ready to go. Okay, this week, and it's another one in this series where I talked to an old colleague of mine, Will, and we did one last weekend. Do brokers want clients to lose money? And there's part 1 of 2 going out this Saturday at lunchtime about what people do, why people lose money, and what can we do to avoid being in the group of losers to give us a better chance. And a big part of that, something we'll talk about, is risk management. So for me, clicking buy or sell is easy. Yeah, the difficult bit is figuring out the risk management side of it. And of course, it's the thing that most people don't pay any attention to. So for me, risk is a really big thing, really big subject. So my risk, I absolutely know what my risk is. And if my reasons for buying gold are going up. So how far are we from these all-time highs? Not far at all, 61.18. So only about 20 points now. 20 S&P points from the all-time highs. Nasdaq's not that far either. Actually, the all-time highs are back here in the Nasdaq, aren't they? So, yeah, let's see. A positive end for the week. I won't be doing anything else this week, to be honest. It's been a bit of a tiring week for me this week, but it's been a good week overall, even though I missed the DAX trade. The gold trade's done all right. I've just seen that oil has slipped to a new low. Not quite new lows for the year. What are the lows in oil for this year? Not far off though. So 72, so about 80 cents below where we are now is the low for the year for oil. So let's see what happens there. But yeah, I was expecting that thing to bounce, and it has not bounced at all. But I haven't traded it, but I've maybe missed the opportunity of going short there. But there you go. Next week's another week. So that's it. If you want access to that webinar, join the WhatsApp group. You can join just for a month if you want to. If you join, you probably will stay for longer than a month, but you don't have to stay for longer than a month. Use the code YouTube for 20% off the first month. To find out who I trade with, go there, bit.ly/DavidTrade. And any questions, feel free to drop me an email. And I do trading courses as well. Go to the website, davidjonestrading.co.uk. Otherwise, we're done, aren't we? I am quite tired, so I am actually finishing up in the next hour. I'll do one more update for the WhatsApp group, but I'm knocking it on ahead for a week. An interesting week next week with the payrolls and everything else. And let's see where these markets are then. I'll be back on Friday next week, and we'll see where everything is after payrolls. So until then, good luck with your trading. I hope you enjoy the video that goes out tomorrow. Lots of useful stuff in that. So if you're not subscribed to the channel, click on subscribe, click on notifications, and you'll see that when it goes live. Otherwise, we'll wrap it up there. Okay. Yeah, rugby. Let's not. I'm going out tonight to avoid the rugby. I'm hoping to check my phone at 10:30, and Wales have managed a surprise win against the French. But yeah, when it comes to risk management, that's perhaps not the most sensible trade. But let's see. Never mind. Low expectations, so we could be surprised. All right. Have a good weekend all, and let's do it all again this time next week and see where we are. All right. Good luck with your trading.